Hello and welcome back to the Rekt Capital channel, and welcome to today's video about minor capitulation and whether or not that's a good indicator in predicting the Bitcoin bottom. I hope you're having a wonderful day today. Let's dive right into the update. We can see here on the Bitcoin 1 week chart, we can see that there is a lot of triangular wedging in Bitcoin's price action on the higher time frames. This is the resistance, this is the support, and we're going to see this wedging price action into the apex as price action coils into the apex of the structure. What we need to have a look here is sell side exhaustion. There's a lot of sell side pressure here, and if we just do this in terms of the volume, we haven't seen that sell side momentum in years. We haven't seen that in years. That's how significant it is. And the fact is, we might be seeing sell side exhaustion. Sell side exhaustion is a thing. It is a factor that we need to consider going forward, because whenever we see pronounced selling, where we see overextending in the sell side momentum, people are selling and selling and selling, at some point it's going to be very difficult to find people who are actually willing to sell, especially after a 53% crash like we've seen in recent days. So for the time being, it is a very young week. It's only Tuesday, but so far we're seeing some green volume already. So that might be some relief rallying right now. So we're seeing some picking up after the rebound from what is essentially the top of this ranging period. So we're seeing a rebound, some initial green volume coming in. This is the green candle. So it's just nice to see a weekly green candle after weeks of prolonged sell side action, especially after last week's crash in Bitcoin's price action. So this is positive so far, but essentially speaking, we need to see Bitcoin's price action manage to weekly candle close above the 200 weekly exponential moving average. That's something I'm going to be watching for going forward, but we have to zoom out. If the weekly wasn't enough in terms of gaining that macro long-term perspective, we have to zoom out to the 10 weekly time frame right over here. Let's look at this recent candle. This is the most recent 10-week candle, which only opened yesterday. So this is a very young candle, but at the moment we're already seeing a rebound following a very strong sell side action right over here, and now we're seeing some sort of rebounding from the bottom of this market structure, which actually has a lot of confluence with the previous ranging period, after which we saw a strong movement to the upside. So that's something we're seeing here in the price action. But what I want to talk to you about today is Bitcoin hash rate and minor capitulation, because we've seen very high levels in terms of the hash rate right over here. This was around the beginning of March, but ever since then we have seen a lot of miners simply become resigned to mining for Bitcoin. Miners are capitulating. This is essentially what the hash rate chart is showing to us, and it's very interesting to note this because we always see miners capitulate prior to the halving. And I'm going to show you a quick calculation about that in just a moment. But what we have to also bear in mind is that every time we see miners capitulate, we can actually see that it might predict a potential bottom in Bitcoin's price action. So this orange metric right over here, this is actually on-chain analytics from Glassnode, and a lot of you guys tend to ask me in the comments on Twitter or on YouTube as to what I'm using in my videos. So just check out the description down below. The on-chain analytics for Glassnode is there, so you can check it out by following the link. Basically, here we can see that the orange lines, the orange metric right over here, showcases to us net unrealized profit and loss, and this is essentially just showing to us minor capitulation. And if we just align this with Bitcoin's price action, you can see that around the time where we see this minor capitulation, we also tend to see a bottoming in Bitcoin's price action. But we're not only seeing this bottoming over here. Of course, this is the bottom after a significant bear market. So in fact, this is the bottom before a new cycle emerges. And the same thing happens here. This is the ranging period. We see minor capitulation around here. This is the ranging period before we actually see upside continuation in Bitcoin's price action in the new market cycle. And the same thing happens here. So this is actually a ranging period that we're quite familiar with. In fact, if we just cycle back to this chart over here, that's the ranging period we're actually talking about. So that was the previous cycle we enjoyed right over here. that's also when we saw miner capitulation, that miners just weren't earning enough profit. It wasn't really profitable to mine Bitcoin anymore. So this is essentially that miner capitulation before the bottom came in. But what I want to actually focus on here is the halvings, because right over here, if we just look at November 2012, when the first halving approximately occurred, we can see that there is a downtrend in terms of the profit, the net unrealized profit and loss for miners. So you can actually see there's a downtrend heading into halving 1, and then we see an increase in not only the profit and loss, but also in Bitcoin's price action. So let's move to July 2016, which is around here, midway. You can also see that there was an increase, a decrease before the halving, and then afterwards we actually saw an increase in terms of the unrealized profit and loss. It was just profitable to mine again after the halving. Miners tend to hold after the halving, which is why we see an increase in price action as well. And of course, we're on the verge of halving number 3 in May 2020, so only around 60 days away. We're seeing a very strong downtrend in the unrealized profit and loss for miners. We're seeing a very strong crash. It just isn't profitable for miners to be mining anymore. But of course, Bitcoin's price action is following through there. But if we look at all these different signs, miner capitulation being at these lows when it comes to the cycle lows right over here, and also the lows if we just look at the halvings, right? Before the halving, we also saw quite a bit of miner capitulation. Before halving 2, we also saw a bit of miner capitulation. And before halving 3, we might be seeing miner capitulation as well. So it's very interesting to see these sort of tendencies, not only in the Bitcoin's price action, because we've seen a bit of an anomalous event in the form of the Black Swan event that we saw in this 53% crash. On-chain analytics will show us data that doesn't lie, which is why we need to just look at what it says. And what it says is that we see miner capitulation happen, which precedes increases in Bitcoin's price. So going along with that, are we near the bottom in terms of what we're seeing here in Bitcoin's price action? And according to this market structure on a very technical level, that might be the case. We still have to see whether we're going to see some follow through following this confluence support level bounce. But at the moment, we are seeing some positive signs in Bitcoin's price action, and it's very important to just keep an eye out on these on-chain analytics and to just monitor this miner capitulation. Because the fact of the matter here is that in this recent downtrend for Bitcoin's price action, a lot of weak hands sold, right? A lot of long-term hodlers didn't sell because they're gonna hold on to their Bitcoin. But a lot of weak hands sold, they panic sold, and a lot of miners who had very small operations also are starting to capitulate over here, right? Because small businesses won't be able to withstand this volatility in Bitcoin's price action. So small miners will capitulate. And I'm going to showcase this to you in terms of numbers. So how much do miners earn? So before the halving, on average, 4,380 blocks are mined each month and added to the Bitcoin blockchain. So if you have 4,380 blocks being mined each month, so you have the block reward of 12.5 at this current price of $5,000 total revenue per month for miners. But after the halving, this will change because the 12.5 block reward is going to get cut in half into 6.25. So the average amount of blocks mined each month won't change. And the price, of course, might change, but at this time, let's say it's 5,000, it's approximately 5,000 at this time, and after the halving, we're going to see a block reward of 6.25. So that's 50%, a cut in half, a 50% haircut in terms of the block reward. Well, that's going to translate into a 50% haircut in total revenue as well. So you can see that this 50% haircut in terms of the block reward translates into a 50% haircut in terms of the total revenue that miners earn per month after the halving. So what is a miner to do if you see that your revenue is being cut in half the moment that May 2020 comes around, swings around, as a miner, your profit is going to be cut in half. And how do you deal with that? Well, as we spoke about, smaller miner operations are simply going to give up. They're going to pack it in and they're going to capitulate and just close up shop. But the bigger mining operations are going to most likely hodl, hold on for dear life. And this is something that we've seen historically. In the past, we've seen that miners, bigger mining operations, tend to hold because they want to hold till at least 10,000 in this case, so that they can actually double or at least come back to this figure, right? Because if Bitcoin's price goes to $10,000 right over here, we will be able to reach this figure once again, right? Even though the block reward got halved, if the price doubles, then essentially speaking, we're still at this point. So we're still at the revenue prior to the halving. And this is essentially what big mining operations tend to do. They tend to hold up until the point where they're actually earning at least the same amount of revenue per month as they were prior to the halving. So can miner capitulation predict Bitcoin's price action? Yes, it can, in terms of predicting the bottom of a new market cycle for Bitcoin. It has done this in the past before on 3 separate occasions since 2012, but also we have to bear in mind how we tend to see miner capitulation prior to halving 1, prior to halving 2 as well, and even going into the halving when it comes to halving 2, but also prior to halving 3, which is what we're seeing right now. And having said that, that's just about it for today's video. If you enjoyed this video, please consider dropping a like, and of course subscribe for more videos like this in the future. I'm more than happy to be pumping out this content on a daily basis for your enjoyment and also for you to find value in it. So if you found value in today's video, please consider dropping a like, and of course subscribe for more videos like this in the future. I'm Rekt Capital. I wish you a very pleasant day ahead, and I'll speak to you very soon.